Okay, so out of all the investments I've done so far, two startups I've got the exit, and both the exits were good. I
Okay.
made a reasonable return on my investments,
Mhm.
and both the exits were not exits by choice for
Okay.
me.
Okay.
uh, because the new investors came and they wanted to clear the cap table
Mhm.
for the non-institutional investors and non-promoters.
Mhm.
So I was neither promoter nor institution. So I had to take the exit from
Okay.
those. But I'm not complaining because I made reasonable returns in both the startups. And that's where your idea of fund
Mhm.
also clicked to me.
Mhm.
Because if I invest through a fund,
Mhm.
then I might not be forced to exit at a juncture where I feel that there is still
Mhm.
long way to go. And but I'm forced to exit because I'm not an institutional investor.
Hi everyone, welcome to yet another episode of Invest with Dexter. At Dexter, we have a micro fund where we invest in startups at early stage, selectively at seed and pre-seed stages. Over the period of three years, we built a portfolio of 31 companies across the spectrum of consumer tech, healthcare, fintech, B2B SaaS across the network. With Invest with Dexter, the idea is to bring forward more and more investors from different walks of life to share their experience around angel investing and startup investing, how they started, what they did, what are their insights currently to invest in the market, and thereafter. So, without further ado, I introduce to you today's guest. I have Mr. Anup Gulati with me. Hi, Anup. How are you?
Hi Ankit, how are you? I'm good.
I'm doing good too. Anup, for the benefit of our viewers, please share a brief intro about yourself.
Hi everyone, my name is Anup Gulati, as Ankit mentioned. I'm a chartered accountant by profession. I passed out in the batch of 1994. I left India in 1996 to join Tatas in Zambia, uh, worked with them in Zambia, then Malawi. Then after that, in 2001, I moved to Angola. And since then, I've been working in Angola. 2009, we started our own business in shipping and logistics. We, in the sense, myself and my wife. So we have a shipping and logistics and supply business.
Mhm.
So that's what we are. And currently we live in Dubai, and I continue to travel to Angola often to take care of the business.
Great.
So
Thanks, Anup. Thank you so much for the intro. So, Anup, you've been with the best of the brands, traveled around the world, and seen a lot of geographies as well as businesses. Very intrigued to know how and what made you start or get into startup investing, especially in India.
when we moved to Dubai in 2015, so we had a friend who was with us in Angola. He introduced to one of his friend in Dubai.
Okay.
And that person has been investing in various startups in India.
Mhm.
So we started meeting him, we were discussing things. And on the back of my mind, I always wanted to invest in some businesses in India
Okay.
because our current business is in Africa and we are still Indian. So I wanted something at back home also
Mhm.
where I'm involved. So that's how I ended up doing investments in a startup. I invested in one of his startups with him. That was at a very late stage, though it was, I think, series after Series B.
Okay.
I invested.
Mhm.
So that's how I started in doing the investments in the startup. That was year 2018.
Okay. So it's been 5 years, Anup. If I may ask, how many investments so far? What has been the sectoral focus, and what are some insights we've gathered over this period?
See, in these 5 years, I've invested in approximately 15 plus startups.
Okay.
Uh, uh, Before Dexter, it was mainly startups referred by the friends or done by the friends
Okay.
only, because it's very difficult to find the right a startup,
Correct.
and especially when you are not living in India and
Mm.
you want to invest in startups in India. So there was no channel to get the information about various startup. But thanks to Dexter, we get a lot of insights and a lot of opportunities to invest in different sectors and different startups.
Mm.
So I would say when I started with the Dexter, I've done three, four in less than a year, the investment. Before that, possibly maybe one investment or maximum two investment in a year.
To be precise, we're at 5. So, but yeah, that's a good number. In just about 7 months of you've been in touch with us, and pretty much every investment is in a very diverse sector. So you have exposure in consumer, personal care, consumer F&B. You have fintech, wherein you have home loans as well as priority sector lending, and you have one more, right? So that's quite a diversified portfolio, and I think that's what I also want every investor of ours to achieve with the help of platform investments which we are driving and the fund we are opening. That we ensure that our investors have a very diversified portfolio, right? We don't know what clicks and how it clicks over the next 5 to 7 years, which is our typical investment horizon to see a good exit. But what's important is as much diversification we have, and of course, doubling down on winners comes in very, very handy. But essentially, to have an exposure in sectors, you have to take a bet somewhere, right? And most importantly, it goes a long way when the fund manager continues to build his thesis around different sectors and back startups with conviction. So I think that principle drives us also to continue investing across sectors, across themes, across businesses. Of course, with the underlying statement that we understand that business to the core, and the founders come in with a very, very strong check, right? So that's been critical for us also as we've been building our portfolio. So thank you so much for putting in a word as well, that your sectors and the investments have been diversified for that matter. Anup, help us understand the next point of bit. You mentioned about one startup, where you did a Series B or other investment. I would like you to share some startup stories where you've, may not have seen success on exits, but success on paper, or at least if you have seen exits, please share a few stories where you've gathered insights as well as made money with time.
Okay, so out of all the investments I've done so far, two startups I've got the exit, and both the exits were good. I
Okay.
made a reasonable return on my investments,
Hmm.
and both the exits were not exits by choice for
Okay.
me.
Okay.
Because the new investors came and they wanted to clear the cap table for non-institutional investors and non-promoters.
Mm-hmm.
So I was neither promoter nor institution. So I had to take the exit from
Okay.
those. But I'm not complaining because I made reasonable returns in both the startups. And that's where your idea of fund also clicked to me.
Mm-hmm.
Because if I invest through a fund,
Mm-hmm.
then I might not be forced to exit at a juncture where I feel that there is still
Mm-hmm.
long way to go, and but I'm forced to exit because I'm not an institutional investor.
Correct. Correct.
And all other investments are still invested because, like you mentioned, that all these startups, the
Mm,
time horizon is typically 5 to 7 years.
absolutely.
And except say one or two where my investment is more than 3 year old,
Mm,
all investments are still at early stage.
okay.
So I'm seeing the growth
Mm,
in those companies, but
mm,
still no exit has happened.
oh,
Which I personally feel should be another 3 to 4 years before I get to exit from next one.
oh, got it. You mind sharing the names of the startups where you've seen your exits?
Yeah, I got an exit from Chios
Mm-hmm.
and IPL Logistics.
Okay, got it. Both are great, great names. Both have been would have made good returns for the people. But, brings me back to that point where you were saying this is a forced exit. So that's where we also play a very critical role in terms of making sure that the exit for us, while we continue to be very founder friendly and we are there 1 a.m. friends, but the terms continue to remain as tight as a Tupperware for that matter. That we are there's no chances of forced exit. There are preemptive and pro rata rights for us in the next round, and all certain rights are secured for us as an institutional investor to make sure that the right sort of returns happen and the right sort of exit is happening at the right time, and there's no compulsion around it. So, as I said, you of course want to back and continue doubling down on your winners, of course, right? And continue to be a part of their growth journey for the longest period of time. Of course, at a certain point of time, you also realize that you've diluted yourself so much, and you pretty much have a very insignificant stake out here. And there's already a large chunk of upside made. So that is the point where you typically discuss with the founders and the incoming investors to really come on to the point where you decide to take an exit. So that becomes a call where you want to take a call at your level rather than being asked to. You know, so that's one critical thing. We also have made sure that we want to ensure because as you rightly see, Anup, we come in at the fact start of the entire investing value chain. We come in at seed and pre-seed stages, where typically the risk is at the highest level and startup mortality ranges from 6 months to 2 years, right? So before us to really see the winners, we have to at least wait for the 2 year period, at least for that matter. And God knows how many died between that period, right? May or may not be anybody's fault for that matter. It could be macros, it could be competition, it could be team, it could be anything for that matter, right? So yeah, you want to double down your winners, you want to continue staying invested, you want to grow your winners. So yeah, that
But like I said, that I have no complaints that I got exited out of those startups. I made reasonable returns.
absolutely right.
So I'm very happy that my friend introduced me to this thing.
Mm.
And both of these investments were referred by the friends only.
Okay.
And I'm very grateful for them.
Mm. Great.
So,
So while Anup, you've mentioned about a brief about Dexter and how Dexter has helped you. I'm being absolutely sheepish in asking you. You've been with Dexter. You started your journey with, one investment where the founder introduced us to you, right? And you've been with us. You've been continuously investing wherever you're getting time, right? I would like to understand your experience about Dexter and how it has shaped your angel investing journey.
see, experience with Dexter has been great. Like I mentioned earlier, also that before Dexter, it was a very limited pipeline of options where you could invest
Mm-hmm.
money. But what you get is you can't go and invest in anyone and everyone. You
Correct.
need to trust the
Mm-hmm.
business, you need to trust the promoters. So what you get is the references through friends and the families, and you can invest only in those limited options.
Mm-hmm.
But with the Dexters, you do your due diligence beforehand, and people approach Dexter because they know that you are in the market of raising, helping promoters.
Mm-hmm.
That really helps investors like me also to bet on the startup
Mm-hmm.
in India. And where the ticket size again could be small to big depending upon anyone's appetite.
Yes.
And so that has been really very good.
Right.
And I would love this kind of platforms to grow and help the community at large, whether it's an investors community or the promoters and the business owners community.
Mm-hmm.
And so we bring both them together and help businesses grow and investors earn reasonable returns.
Thank you, Anu. Thank you for the positive word of confidence. Before we move on to the exciting segment of ours, which I've picked up from a Bollywood show for that matter, I'd like to take your last take on those who are just about, thinking about startup investing. We all know India is the third biggest startup economy. While the number of startups is just behind US and China, the number of angel investors is much, much behind. We have just about 20,000 angel investors recorded or accredited. Maybe maybe 60, 70% are still active and continuing to play their roles, right? So with my initiative of Invest with Dexter, I would like to, bring forth more and, expose more and more investors to this asset class. I would like to take, your opinion on what you would suggest to these first-time investors and investors who are considering this asset class, since you've been investing across multiple investment classes and you've explored this as well big time. So help us understand that bit for your view, from your view.
Say, I would suggest that this kind of investment is always a long-term investment.
Mm-hmm.
So anyone trying to invest in the startup, he should invest only the spare cash, what they feel is not needed for next 5 to 7 years. If it's a short-term or medium-term cash, they should stay away from this journey,
Mm-hmm.
because here exits might not be possible in short term, and their cash will be locked down for a long term in this journey. And plus, like you mentioned, that if you are coming at a very early stage where for initial investment is low and there might be some mortality, so
Yeah.
your investment might become zero as well.
Mm-hmm.
So you should be ready to lose investment, a particular, not necessarily all of your investments will go back. You will make money somewhere, you will lose money somewhere. But one should invest only that much in a particular venture which he doesn't mind losing.
Mm-hmm. Got it.
So that's very important.
True. Great. Thanks, Anup. Puts a lot of perspective from yet another investor from a different walk of life for us. So thank you so much for that. As I said, I have picked up a segment from a show, and that's called Rapid Fire. So I'll take quick opinions from you on a few set of questions. So I'll start. Three things you look at a startup when you invest.
See, I would look at the startup, that what problem they are solving
Mm-hmm.
in the country,
Mm-hmm.
and have it been done somewhere else
Okay.
before?
Mm-hmm.
If yes, what was the success
Mm-hmm.
or was it failure?
Mm-hmm.
And uh, have the startup adjusted to the Indian market?
Okay.
Because every market is different. Something which is successful in other market not necessarily will be successful in India unless it has been adapted to the Indian market. So that's what I will look into.
Got it. Three red flags you look at in a startup when you reject.
Red flag, if promoters are not full time, that's the biggest red flag for me. Second, since if I will be doing early stage, if the promoters have less than 67%, less than two-thirds,
Mm-hmm.
then I would not like to invest in that, because there is no skin in the game
Got it.
for that. And if there are just too many
Hmm.
of them,
Okay.
that is again a red flag, because if too many people are there, it becomes difficult for the startups to move quickly and adapt quickly.
Mm-hmm. Got it. Understood. Three sectors you want to take a bet on for the next 10 years.
One is healthcare,
Mm-hmm.
education,
Mm-hmm.
and IT.
Okay. This or that set of questions, you can choose this, that, or both. Founders with a strong institutional background or founders with strong operating experience in the domain.
Both.
Both. Large market with several VC funded players or growing market with lesser competition in what I would call as a white or a gray space.
uh, White space.
Okay. Startup which is profitable from day one, startup with profitability in the foreseeable future, or hyper growth focused startup and profitability comes when it comes.
A startup with the foreseeable profitability in near future.
Pre-seed seed startup at a lucrative valuation, or startup having achieved its PMF and comes at a much premium valuation.
Both.
Got it. Brings me to the end of my interview, Anup. Thank you so much for taking out time on this Saturday evening to share your insights with us. I hope more and more investors get encouraged listening to you and they get to identify some of their chayos and IPL for that matter, right? So, yeah, thank you so much for your time. Thank you so much, Anup.
Thanks, Ankit. Thanks for having me and have a nice weekend.